So you're thinking about moving to Michigan and you're thinking about buying a house when you get here. Well, in this video, we want to give you 5 different options of home loans that are available to you when moving to Michigan that you should consider. So you're thinking about the Midwest. In particular, you're thinking about Michigan. Well, in this video, we want to help you with 5 different loan options available to you here in Michigan, some of the unique features, some of the different options. So if you're thinking about buying a home, you can prepare yourself of the different types of loans to see what's in your best interest. My name is Matt Talbot. I am the associate broker and team lead of the Talbot team. My team and I help people just like you every single day move here to Michigan, and we absolutely live for it. We get calls, texts, emails, DMs, all sorts of inbound activity of people that want to move to the area and have more questions, and that is where our bread and butter is. If that's you, if you're thinking about moving in the next 6 to 12 months, give us a call, send us a DM, or fill out the Calendly link here on YouTube, and we're happy to start those conversations today. So you're thinking about Michigan, you're thinking about the Midwest, you want to move to this part of town, you got a new job, you're moving back here for family, whatever the reason may be. In this video, we want to take you through top 5 loan options here in Michigan, some of the different pros and cons, some of the different advantages depending on your unique situation that you can take advantage of when moving here to Michigan. Loan options, lending, mortgages, that's a very, very important piece when it comes to purchasing a house. So first thing, before I jump into the different loan options, is realistically when you're purchasing a house, I really look at 2 major pieces. Number 1 is your real estate agent is sort of the quarterback, okay? They're going to lead you along the way. They're going to coach and educate you on the process. They're going to show you the homes. They're going to negotiate for you. There's a lot that they do, okay? More than just opening a lockbox. At least the good real estate agents, not all real estate agents do all that stuff, but the good ones definitely do. So there's a lot of stuff that good real estate agents do. Now, the running back or the number 2 person, if you're financing, which most of our buyers locally do, they borrow money to purchase a house on a mortgage, right? If you're financing, number 2 is going to be a great loan officer or company that also assists the real estate agent and the buyer along the way, all right? So great loan officers, same as real estate agents and great companies when it comes to the mortgage side of things, are not all equal. One thing I highly recommend, whether you're moving in Michigan or somewhere else, is first shopping and finding a good real estate agent that makes the most sense for you, that you're in alignment with, that's going to do the best job for you. And then number 2 is talking to one or more of their preferred partners and preferred mortgage lenders to kind of get the lay of the land and figure out who's going to be your best case scenario there. Those will be number 1 and number 2, kind of like the quarterback and the running back along the way. But make sure, again, follow your real estate agent's lead. Find one that you trust, find one that you know is going to do a good job for you, and then let them introduce you to loan officers, and you can find good lending options that way. So jumping right into things, we want to give you 5 different loans available to you here in Michigan and explain some of the pros and cons, some of the differences. You might qualify for some of them or all of them depending on who you are and what your needs are, and there's different advantages to all the different types of loans. The first loan that we want to talk about today is FHA loans. So FHA loans you probably see pretty regularly if you're doing any shopping for mortgages, or maybe you've never heard of it. Either way, an FHA loan is a federally backed loan. It's a federally backed mortgage, okay? And so it's a great program a lot of times for first-time buyers. It's a great program to get in with little money down, as low as 3% down on an FHA loan, and you also get a good amount of different options available to you when it comes to seller concessions to help pay for closing costs. So first thing, what are seller concessions? Seller concessions are a way that the seller actually can pay back the buyer or cover part of the buyer's closing costs when purchasing a home, which makes it less cash intensive up front. So FHA loans have regulations around them that allow you to be able to have some of your closing costs paid for. Again, if you want to dive into specifics, let us know. We can explain more deep here, but this is definitely a great loan for a lot of people, a lot of first-time buyers, a great option. There's pros and cons to all loans. The pros for FHA FHA is loan down payment. It's government backed is one of the biggest pros, meaning that if the loan you can never default, okay? The federal government is going to back that loan. So if you borrow, let's say you borrow $300,000 to purchase a house, and it's on an FHA loan, and your lender were to default, well, the federal government's literally backing that. So unless the United States government goes under and they don't have the money to cover it, your loan is covered, which is a huge benefit of that type of program. Now, the flip side is because the federal government's involved, there is some more hoops to jump through along the way, specifically for the seller side of the coin. So there's a little bit more paperwork. There's some more extra steps during appraisal that happens that makes it a little bit more convoluted for a seller and sometimes for the buyer along the way. So great option. Definitely not talking down FHA mortgage by any stretch of the mind. I think it's a great opportunity for a lot of people. However, in competitive situations, you want to be somewhat strategic because there is a little bit more work along the way with a loan like that. Number 2 on our list here in Michigan, we have tons of clients that take advantage of this all the time. We've had the privilege of working with a lot of different veterans through the year, and so that is a VA loan, which is a veterans loan. VA is a great option for those veterans out there. It's a very unique loan. It's one of the only loans where you can actually purchase a home with 0% down. So there's still closing costs, which there's a difference between down payment and closing costs. If you don't know, that's a major difference. So down payment is the amount of equity you're putting into the house right away, but there still is closing costs to purchase a home. So for instance, in Michigan, most of Southeast Michigan here, taxes are paid in advance. Okay, so what I mean by that is you pay the taxes for the next 6 months, right? You pay your summer tax bill for the next foreseeable future. Just think about it that way. And so when you close, you actually pay the seller back for those taxes. They're prorated. There's other costs around purchasing a home as far as lending costs. There's title work. So there's closing costs associated with buying a house, and there's down payment. And so a lot of people think down payment's the whole thing. It's not. Typically, if you're doing 3%, 5%, 10%, 20% plus down, whatever it is, you still have additional costs when it comes to closing costs, okay? So those get wrapped together as your total cash to close. Well, with a VA loan, you have a 0% down, so you literally don't need to bring any equity into that house. It's one of the benefits of being a veteran in our country. So great option. Tons of people take advantage of this all the time. We literally work with buyers almost every month that have a VA loan. We work with them very, very regularly, and this is a great option. Sometimes with some of these loans, you want to shop around, have a good lender, have a good real estate agent that will give you multiple options to use. And so there's a lot of pros. The biggest pros of the VA loan is 0% down. The biggest con, similar to FHA, on the devil's side of the shoulder here, is again, the federal government is involved. There's some more hoops to jump through. There's a little bit more scrutiny on the seller along the way. So with both FHA and VA, things like chip paint, sometimes if there's trip hazards, so let's say the sidewalk, has a 3-inch kind of offset, and it's a trip hazard, the FHA and VA make sure to inspect that a little bit, which is a good thing. It protects the borrower, it protects the buyer, okay, to make sure that homes are in good shape before they close. However, from a strategy perspective and from a seller's perspective, there are some more hoops to jump through. So good for one side, a little bit harder for the other side. It's important to understand the nuances of that and have a real estate agent that knows the nuances of it so they can speak accordingly. If you have a good agent that knows an FHA loan or knows a VA loan, then they're able to speak accordingly and understand the specifics that goes into that particular house. Meaning, if I represent a buyer and I'm calling a listing agent and we're presenting a VA or FHA, explaining, hey, I looked at this house, there's nothing to worry about, or there's just one piece we can get proactively repaired so we don't have any hiccups, the deal still goes smooth. Having someone with those capabilities allows you to get your FHA or VA offer accepted, which is super rare sometimes for other agents. If you don't know, sometimes listing agents are scared and apprehensive, and if you don't have a good buyer's representation to help you through that, it can be difficult to get those loans accepted. So pros and cons of both sides, but very important takeaway is having an agent or team and the resources available to help get your VA or FHA loan accepted. It will really help you out in those cases. So those are our first 2 loans on our list. Okay, before I jump into loan number 3, which is very, very good for people moving here to Michigan, because a lot of the people that we move here for very specific reasons, which I'll get into in a minute. But before I jump into that, if this video is providing any value to you, please hit subscribe, tap for notifications, hit the like button. It really, really helps us out. We really, really appreciate it. Okay, so a lot of people moving to Michigan, they move here for a lot of different reasons. reasons. And one of the reasons is they actually don't want to be in a big city anymore. They want to be a little bit more in the sticks. They want to farm. They want to be a little bit more country. They want to be a little bit, in the outskirts of town, okay? Which is awesome. We work with those buyers all the time. I thoroughly enjoy it. What's so cool about Southeast Michigan is you have some big cities, but 30, 45 minutes from any big city, and you can be sort of in farmland and stuff like that too. So there's a lot of good things happening, a lot of busy areas, but also you can get to more rural areas fast. And so up next on our list of great loans, if you're thinking about moving to one of these rural areas, is a rural development loan, okay? This is a great option for a lot of people, and specifically in those more rural areas. So the state of Michigan has decided where these areas, I think it's through the state, don't quote me on that, but has decided where these areas qualify for what's called a rural development loan. And a rural development loan is, again, a very unique opportunity and rare opportunity for as low as 0% down when purchasing on those properties. Another word for the rural development loan is actually the USDA loans, and I have some information here that I pulled up just to give a little bit more specifics, highlighting the USDA loan or rural development loan here in Michigan. For a family of 1 to 4 in Michigan, the average household income limit for USDA loans is about $110,650 exactly. For a family of 5 or more, it can be as high as $182,550, so $183,000 as far as household income. No down payment. You can finance 100% of the home. No maximum loan amount in Michigan. No assets needed to qualify. Flexibility in credit guidelines. Competitive fixed interest rates, so payments do not increase. USDA loans are for new and existing properties. So again, guys, what the idea here is, there is an income limit. So to qualify for some of these loans, there is income limits. As an example, that's why these cases are a little bit unique to you. And if you want to dive deeper, reach out to us or a local loan officer. We can definitely put you in touch with some great local loan officers that can give you specifics on your situation. But there is income limits when it comes to some of this stuff. And again, what the idea here is to develop the rural areas to help, feed agriculture, help feed the farmlands, help continue to add to some of the more rural areas throughout Michigan. And again, that USDA loan or rural development loan is a fantastic option if that is you and you're thinking about moving more to those areas. One thing to note with all these loans is the guidelines change. There's some not pros and cons. The guidelines continually change with a lot of these loans. That's why I want this video to be specific and long lasting, meaning I don't want to dive into too many exact specifics based on, the current market, because you might see this video in 6 months or a year and things could be a little bit different. However, understanding the different options, understanding that there are a plethora of different options to look into, and learning what's good for you at that particular point in time is very, very important. So this is not one of our official loans, but I also wanted to talk about a Michigan down payment assistance program where you actually get money to purchase a home, and that's coming up next. Up next to our 5 loan options here when purchasing a home in Michigan is a bonus option, and that is the Michigan Down Payment Assistance. So this is not in our top 5. This is additional to, and that is the MSHDA loan. So making sure I actually say that properly, the MSHDA loan. So making sure I say that properly is the Michigan State Housing Development Authority brought into a $10,000 down payment assistance. So before, there was a $7,500 down payment assistance program where the state of Michigan actually gave you money to purchase a home. Recently, in the last couple of years, they changed that to $10,000 that is available to you when purchasing a home in Michigan, and it's really for low to middle income home buyers. Before, there's 236 zip codes available, so it had to be in a very specific area, and now they bumped that up to almost 1,988 zip codes are available. So Michigan has always provided assistance, at least for the recent past, has provided assistance when purchasing a home for low to moderate income families and households. It used to be $7,500. They moved that to $10,000, and they opened the amount of areas in which you can qualify for. A couple other specifics I wanted to mention here, again, as the regulations change, just to give you some brief overview. There's a couple things you need to complete. One is a home buyer educational class, and other restrictions include purchase price and total household income limits also apply. So basically, for low to moderate income families in a lot of different areas throughout Michigan, you can get up to $10,000 through the state from a MSHDA home loan, okay? So it's a very unique feature. There's a class that you take. It's nothing terribly hard, and actually helps you with the home buying process as well, too, so you'll be educated on home ownership you understand what that looks like. That helps you along the way. So between that class and working with a real estate agent, if you're a first-time buyer, and again, you're low to moderate income in certain areas and you qualify, okay, at least as far as what you're showing on paper for your household income, this can be a great option for you as a bonus feature. Coming up next is conventional mortgages, and one of the most important to understand. Up next on our list, coming in at number 4 of loans or mortgages to consider when moving here to Michigan, is the standard conventional mortgage. So this is critically important, one of the most important to understand. A lot of times people may qualify for this mortgage and other options, but understanding what that means to you can be critically important, because just because you qualify VA or FHA or some of the other loans available to you, understanding if you qualify what we call conventional can be very important in this competitive landscape that we've been experiencing for some time. So what I mean by that is a conventional mortgage is a mortgage, and it is a most conventional standard, meaning there's the least amount of least amount of hoops to jump through. There's the least amount of red tape along the way, and so it's very, very nice to go with a conventional mortgage for the seller and sometimes for the buyer as well too, for the ease of sale. That's one of the biggest, smoothest advantages. One of the other biggest advantages is conventional mortgages typically are going to be one of your best price mortgage options available to most borrowers and to most buyers. You typically get the best rate, you can get the best terms. There's a lot of different options, a lot of places to shop to really make sure you're getting the best possible pricing on that conventional mortgage. And so it is a fantastic option and very important option from a strategy perspective to understand if you qualify for it. So again, like I talked about with VA and FHA and some of these other loans, having your agent walk you through pros and cons, and sometimes actually getting qualified for multiple different financing options can be fantastic and very, very lucrative for you along the way, but also very, very strategic to make sure that you are picking the best to make sure you are picking the best possible loan option for you and making sure it's the best possible loan option. The best possible loan option, not only for you, but also unique to that home. So sometimes one home you might write a loan on this way or choose this loan option, and sometimes in another home you might choose another loan option. So understanding all those different qualifications are very, very important. Okay, so a couple other notes here on my list when it comes to conventional loans to talk through to make sure that I'm hitting the major features. Again, we don't want to dive into too many specifics in this current market because I don't want to confuse people or give inaccurate information as the market evolves. But loans not backed by the government, so that's an important piece. That's a con to a conventional loan. So like I said, FHA, VA, some of the government-backed loans, they're not always backed government from the federal government perspective with conventional, meaning that if you borrow from ABC Bank, hopefully ABC Bank doesn't exist. I don't mean to trash talk ABC Bank, but if you're borrowing from just Bank A, okay, that's what we're going to call it. You're borrowing from that loan and they lend you the money and they go out of business, okay, and something happens, you could potentially not have a loan to pay back, right? The lender can lose that amount of money. And so if it's not federally backed with a conventional loan and some of the more let's say aggressive loan options out there, then sometimes there can be some risk. So again, understanding, are you going through a qualified source? Are you going through a mortgage broker? Are you going through a qualified bank? Are you going through someone that is going to be able to back that investment is very, very important, because not all loans are the same. You can get a conventional loan from John Doe down the street, and again, if John Doe loses his money and he's not paying that back, who pays the loan? So it's important to make sure you understand that it's a credible source that you're borrowing the money from. For those with lower debt to income ratio, that's one thing I should definitely mention. So debt to income ratio for all these loans come into play. And what debt to income ratio is exactly that. It's the amount of debt that you show on paper to the amount of income you have coming in. So debt is things like a car payment, another mortgage, another house that you own, maybe you owe student loans, maybe you owe credit card debt. All that stuff gets added up as total outgoing expenses on a monthly basis. Okay, your car payment's $500. You have $500 a month in credit card debt. You also own another property that's $1,500. So 500 is 1,000, 2,500, and maybe you have another 500 in expenses. That makes it $3,000 per month. Okay, and the income, maybe you make $120,000 a year to have simple math. That's $10,000 a month. So your debt to income, you show $10,000 a month of income, and your debt is $3,000 a month. So that is your your debt to income ratio. And so typically that ratio, your debt can never be more than 50% for the most part. Again, these regulations change and stuff like that. And so depending on your debt to income ratio, it can affect whether you qualify for specific loan types. And so with conventional loans, because you get the best interest rate, the most aggressive pricing, you need a better debt to income ratio, as well as credit score and some other options as well influence what loans you qualify and don't qualify for. Another note that I want to mention is somewhat of a higher down payment. So in the past, typically conventional loans would need a higher down payment, which makes sense. You get a better rate, you get a better pricing, and so you're bringing more cash to the table. You're bringing more of your own hard-earned income, hard-earned cash today to the table. In recent years, they've lowered that quite a bit. You can usually get as low as 3% down now with a conventional mortgage. In the past, it used to be 5, 10, 20% down. You can, of course, do that type of down payment, but now there's a lot more options available to qualify conventional with lower cash that you're bringing to the table. Can finance a primary residence, vacation home, rental property, etc. That's why I have my notes here. This is a really good note to consider. So a lot of people might be buying a home in Michigan and have a home in Florida or Chicago or New York or wherever, right? Anywhere in the world. And this might be a second residence for you, okay? So if you're thinking about moving to Michigan, it's a second residence. More often than not, most of the other loans available to you need to be for your principal residence, your primary residence. Any, down payment assistance, any of these other loans typically is going to be for your principal residence, but conventional loan is a type of loan you're going to have to go through for a vacation house, a lake house, a second property, that type of stuff. So you actually need to qualify conventionally to be able to purchase a home like that. Again, as little as 3% down, upwards of 20% plus down on a conventional mortgage, good debt to income ratio, decent credit score, all that stuff helps you qualify conventional, which is going to give you aggressive pricing. Again, a little bit less hoops to jump through. None of these loans are good or bad. It's just very situational, and we want to make sure to understand what's best. It's just very situational, and we want to understand what's in your best interest along the way, so we're picking the best option for you. We have one very important loan to finish with. For a lot of people moving to the state, a lot of our clients, this is a great option. Okay, last but not least, well, before I dive into last but not least, please hit subscribe, tap for notifications, and like this video if it provided any value to you. If you're thinking about moving to the area in the next 3 months, 6 months, 12 months, or even further out, send us a DM, contact us today. The longer the runway we have with our clients, the more education we can do, the more comfort they have, the easier, the smoother that the move goes. So definitely, if you're thinking about moving in the next 3 to 6 months, call us today. If it's even 6 to 12 months out, let's set up that calendar link. Let's get going on at least an introduction, keep a casual conversation started. That'll go a long way to make things very, very smooth on your move here to Michigan. The last loan to consider when moving to Michigan. This is a very, very critical loan for our business in specific, and that is our physicians program that we have available here in Michigan. So if you are a doctor, you have doctor in your title, you qualify for this loan. We've had the luxury and opportunity to work with tons of physicians through the years and tons of different doctors. There's a huge amount of healthcare system here in Michigan, and a lot of our out-of-town buyers are moving here to go to school or to start the residency or to start a fellowship here in Michigan, and it's very, very important that we give the best possible options available to those people that are physicians that help us out in the medical community that have worked so hard to get to this point. And through that program is our physicians program. We have a couple really good banks locally here that we work with that have the best of the best when it comes to the physician program. And there's a few major benefits for people that have worked so hard to become a doctor that qualify you for this physician program. Number one is a 0% down payment, okay? You can get away with a 0% down payment as a physician. People might say, well, why does a doctor need 0% down financing? Some of them definitely do not. Others, specifically residents, or if you're new to your career, you get involved in the medical community. You go through all these classes, you go through all this training, you go through all these. It's really, really stringent for a lot of these physicians. And a lot of times you don't always start out making the big bucks, right? You got to slowly work your way up the totem pole in those worlds. And so that's a very, very beneficial situation for somebody who's fresh out of school, maybe has lots of student loans and stuff like that. The 0% down program is very, very important. Why this exists is obviously a lot of physicians, a lot of people working so hard to get to the point of doctor, whether you're a dentist, physician, whatever, you get to the point of becoming a doctor. It's a very low risk loan, obviously, for the bank. So they're able to accomplish some things that you might not get elsewhere. Some other other, benefits here. Faster closing we have in here. I don't know if that's necessarily a benefit, if that's necessarily true or false in my opinion. That's just a note that I have. From my opinion, these closings take a similar amount of time in my opinion. Uncounted student loan debt. So this is a very good way to say this. Student loan debt is not counted against you, allowing to qualify for a nicer home. And so what that means is, a lot of time, going back to my previous video talking about debt to income ratio, a lot of times docs and physicians, they have a good amount of debt, and there's a good amount of student loans there. So what these programs allow for is to kind of remove that debt from your debt to income ratio, allowing you to qualify for a more expensive house. And what the thought process is as your career moves, you're going to make more and more money. That debt will be paid off, which is typically happens fairly fast for a lot of physicians. And so they can actually work the numbers to remove a lot of that debt to income ratio on the student loan portion of that. No private mortgage insurance, so it can save you up to 1% annually, as according to this article. You're not paying any PMI. So typically, if you're not getting to 20% down with most of the loans we've talked about today, you pay what's called private mortgage insurance, or PMI. A lot of people think that that's a scary thing. It's not always a horrible thing for some of the other loans. However, it is a benefit of this loan without a doubt, not having to pay private mortgage insurance if you're not bringing the full 20% down to closing. So 0% down, no PMI, no private mortgage insurance. You're getting better pricing as a physician. It's a lower risk loan for these banks. So this is a fantastic program, and we take advantage of it. I think we close a physician loan just about every month with our team, to be honest with you. And then last but not least, higher loan limit. Higher loan limit up to $5 million are available typically at the same rate. So a lot of times, some of the loans we didn't talk about in this video come into play, okay? And so what I mean by that, a lot of times you have what's called the jumbo loan, which once you get to a certain price point of a home, you pay a higher rate because there's more money being borrowed, there's more risk to the lender along the way. So through these physician programs, they actually do not give you that additional kick, that additional uptick in your mortgage when you get to a higher loan limit, because of your position and because your ability to pay it back and all that type of good stuff. So it's a very, very aggressive loan that makes a lot of sense for physicians out there. Now, very, very important note, I'm not going to name anything specific. I'm not going to steer you in any specific direction. However, we've had a plethora of experience when it comes to physician loans, and they are not all the same, okay? There's some banks that give you some things. There's a lot of times we've seen overpromise and underdeliver when it comes to some of these physician loans. So not only understanding what banks are available, but also understanding what loan officers specifically work heavily in this area, specifically can qualify your type of loan, and depending on the type of doctor you are, depending on what your degree is, there's a lot of different nuances here. So you want a real estate agent that's worked with this very heavily, and B, them to refer you with a good loan officer that covers the physician program on a regular basis. I cannot stress this enough. A lot of doctors move to the state. They just think, oh, all things are the same. I'll get the 0% down or whatever, and I'll just look at pricing. There's so much more to these loans that's very, very important. And again, that's something you shouldn't have to think about. You should have the quarterback and the running back, your meaning you should have your real estate agent and your loan officer take you down the path, talk very specifically to what's in your best interest, and you can fully understand in a clear way of what options are available to you. That physician's loan is a fantastic program for so many people. So if you're a doc, you're thinking about moving to the state, we work in Ann Arbor, we work in Detroit, we work all the way in Lansing and throughout Southeast Michigan. And if you're looking at other places in the state, you're moving to Grand Rapids or Traverse City or some of the other different hospital systems, give us a holler. We have great referrals across the country of people that work specifically with physicians, specifically with these loans, and are able to help you out understand your world. My name is Matt Talbot. This is the Living in Detroit channel. My team is the Talbot team. We are Redefine Real Estate. We're so happy for the opportunity to help people move to the state all the time. Thanks so much for checking out this video. Please tap for notifications, hit subscribe, and if you want to move to Michigan in the foreseeable future, let us know ASAP.